Over the last year, more than a dozen publicly traded companies around the world have announced that they'll be buying Bitcoin. Their stocks went parabolic as a result, and many have continued to pump.
Pump it!
And just recently, Cardano and Polkadot announced plans to accumulate Bitcoin too. And this has everyone wondering if ADA, DOT, and other altcoins with Bitcoin treasuries will pump the same way that the stocks did. And that's why today we're going to do a deep dive into why Bitcoin treasury companies have performed so well, assess whether altcoins with Bitcoin treasuries could follow suit, and examine just how high they could go. My name is Nick. Stay tuned. The reason why Bitcoin treasury companies have performed so well is quite simple. By accumulating BTC, the future valuation of these companies increases if BTC continues following its historical trend. Now, for context, BTC's annualized return over the last decade is around 50%, outpacing every major other asset class. Because the markets are forward-looking, investors will price in the future growth of these BTC reserves today, which is why the shares of Bitcoin treasury companies rally so much when they announce these acquisitions. It's also why they tend to rally when they announce they're going to be buying more. Investors are just pricing in the fact that the Bitcoin treasury company has purchased more BTC, meaning that the future value of the shares will be even higher. Again, this all fundamentally assumes that BTC will continue experiencing annualized returns of 50%, which is not guaranteed, but that's the logic here nonetheless. And this begs the question of why investors continue to buy these companies when they can just buy BTC directly or indirectly via spot Bitcoin ETFs. The short answer is that Bitcoin treasury companies are typically businesses with cash flows that can be used to fund additional BTC purchases. As such, you can think of Bitcoin treasury companies as being spot Bitcoin ETFs that also have a side hustle that generates additional income that can be used to buy even more BTC to back the shares of the company. Each Bitcoin treasury company has its own unique side hustle, which creates a variety among these companies. The real question then is how exactly these Bitcoin purchases are being financed, and whether it's something that altcoins like Cardano or Polkadot could also do. Broadly speaking, these companies have been raising money to buy Bitcoin in two ways, by issuing debt or by selling shares. Obviously, there are many ways that they can structure these capital raises. For example, Strategy, previously MicroStrategy, is famous for issuing large amounts of convertible notes, which are basically corporate bonds that can be converted into company shares at some later date. Of course, the main concern about altcoins like Cardano and Polkadot creating their own Bitcoin treasuries is that they will need to sell lots of ADA and DOT to fund their BTC purchases. In theory, this will result in lots of selling pressure that causes the prices to fall, which their communities obviously don't want. In practice, however, altcoins theoretically have more options to finance their BTC purchases than publicly traded companies do, and some of these options could be even more optimal. For instance, ADA could be used as collateral in DeFi to borrow stablecoins to buy BTC for Cardano's community treasury. If the loan-to-value, or LTV, is kept low, then there would be little to no risk of liquidation. This approach would make it possible for Cardano to accumulate tens, possibly hundreds of millions of dollars of BTC without having to sell a single ADA indefinitely. By contrast, most of these companies are structuring their Bitcoin purchases in a way that eventually requires the sale of shares, which is, of course, much less optimal. And by the way, guys, if you're enjoying this video so far, then let it be known by smashing that like button down below. And don't forget to subscribe and ping the bell as well, so YouTube gives you a bell as well the next time we release another video. Back to the vid. Now, this begs a bigger question, and that's what exactly Cardano and Polkadot are planning in terms of their Bitcoin treasuries, and what impacts it could have on ADA and DOT. Starting with Cardano, its founder, Charles Hoskinson, started openly discussing the possibility of creating a decentralized sovereign wealth fund for Cardano in mid-June, and said that a portion of this fund could be used to buy Bitcoin. Now, for reference, Cardano's community treasury holds close to 1.8 billion ADA that's worth close to $1 billion at the time of shooting. Logically, Cardano's sovereign wealth fund would be funded using Cardano's treasury, with Charles noting that they could use $100 million worth of ADA to start with. Now, it's extremely important to note that the purpose of this sovereign wealth fund is not to become a Bitcoin treasury company. In case you forgot, only a portion of this capital will go towards buying BTC. Most of it will go towards buying stablecoins to give a boost to Cardano's DeFi ecosystem. To put things into perspective, there's only around $30 million of stablecoins on Cardano according to DeFi Llama, but I should note that this is apparently by design. The Cardano community is hyper-aware that large stablecoin issuers like Tether and Circle could have significant influence over the blockchain. And this is why Cardano's ecosystem has been working on launching its own native stablecoins. The only problem is that the growth of Cardano's stablecoins has been stagnant. Cardano's sovereign wealth fund ultimately aims to be the solution. In practical terms, this means selling $100 million of ADA to buy Cardano stablecoins to increase its DeFi liquidity. Again, a portion of this capital will go towards buying BTC, which could also be used to bootstrap Cardano's Bitcoin DeFi protocols. Before you panic, Charles explained that these ADA sales would be done over the course of multiple weeks with the help of market makers to ensure that they have little to no impact on ADA's price. Not only that, but the yield earned on the stablecoins would be used to buy back all of that ADA over time. Charles revealed in a recent X post that the specifics around how Cardano's sovereign wealth fund will work will be revealed at the Rare Evo conference, which takes place from August 6th to 10th in Las Vegas. Between now and then, be sure to follow Charles on X and YouTube for any additional updates. Now, given the specifics of Cardano's sovereign wealth fund are still up in the air, it's hard to say exactly what it would mean for ADA's price. That said, there's no question that Cardano has the connections required to gradually sell large sums of ADA without causing it to tank. It's also worth remembering that the news of this Cardano sovereign wealth fund launching could also cause the price of ADA to pump. In the long term, the yield strategies employed by Cardano's sovereign wealth fund could also help support ADA's price during downturns and also grow the Cardano ecosystem during the bear market. As some of you will know, lots of Cardano projects shut down in the last bear market due to lack of funds. A Cardano sovereign wealth fund could prevent this from happening, assuming it's managed correctly, of course. In sum then, Cardano's Bitcoin buy will be likely bullish in the short term when the announcement is formally made. It could also create bullish tailwind in the long term that could support ADA's price and Cardano's ecosystem, which is essentially the entire purpose of having the wealth fund to begin with. And say, if you want to trade the upcoming announcements at Rare Evo, then check out the Coin Bureau deals page down in the description or by scanning this QR code. Over there, you'll find sign-up bonuses of up to $100,000 on the best exchanges. You'll also get 50% trading fee discounts and 75% cashbacks on deposits on said exchanges. These deals are only available to Coin Bureau viewers and won't be around for long, so take advantage of them ASAP by this QR code or the link down below. Back to the vid. Now, Polkadot's plans to buy BTC are where things get even more interesting. Discussions around creating a, quote, strategic Bitcoin reserve have been around since as early as January, when a member of the Polkadot community highlighted the fact that DOT continues to lose value against Bitcoin. Naturally, they proposed that Polkadot consider using a portion of the treasury funds to buy BTC as a hedge against further losses. In case you missed it, the Polkadot community had previously voted to convert some of the DOT in their treasury into stablecoins. According to treasury.com, there's around $100 million of assets in the treasury, mostly comprised of DOT. Notably, some of the stablecoins in the Polkadot treasury are being lent out in DeFi to earn a yield. Newsflash, this means Polkadot is effectively doing what Cardano wants to do. Anyways, fast forward to June when another member of the Polkadot community followed up on the initial discussions around a Bitcoin treasury by formally proposing a plan for Polkadot to buy Bitcoin. And this would involve slowly purchasing TBTC, a form of wrapped BTC, over the course of a year using 500,000 DOT from the Polkadot treasury. That's around $2 million at the time of shooting this video. Hippie Stank, the wonderfully named user who proposed this plan, noted that they would submit an on-chain proposal, quote, as soon as next week, which would have been sometime in the second week of June. However, we could not find an on-chain proposal for Polkadot's Bitcoin treasury on the official governance website, so this suggests that discussions around a Polkadot Bitcoin treasury are still ongoing for the time being. As to why that's the case, we reckon that's because those in favor of the proposal are trying to gather the necessary community support to ensure the on-chain proposal passes. As far as we can tell, there is widespread support for the proposal, so it's probably only a matter of time until it's tabled and passed. Now, what makes Polkadot's plans to buy BTC so interesting is that it's something that Polkadot founder Gavin Wood actually proposed in an interview way back in November 2023. He advocated for the Polkadot treasury to diversify its assets, including fiat currency, gold, NFTs, and other cryptocurrencies. So far, the Polkadot treasury only holds fiat currencies in the form of stablecoins and one altcoin from Polkadot's ecosystem. It stands to reason then that we could see further diversification into other assets, with Bitcoin likely being first in line due to its accessibility and the hype around Bitcoin treasuries. As for what it means for DOT, it's a similar story to ADA. DOT could pump in the short term due to the speculation if the BTC purchased is approved by the Polkadot community. Gradually selling $2 million worth of DOT would probably have next to zero impact on its price, and the TBTC accumulated by the treasury could likewise act as a tailwind and support for DOT and Polkadot's ecosystem, respectively. Then again, it's not like Polkadot is planning on buying billions of dollars worth of BTC, nor is Cardano for that matter. It's possible that these allocations will have no impact on DOT and ADA as a result. Polkadot and Cardano are also missing another key ingredient: a side hustle that can be used to buy more BTC. As we learned earlier, the reason why Bitcoin treasury companies have performed so well is because BTC has historically experienced annualized returns of 50%. So, when investors see these companies buying Bitcoin, they start extrapolating its historical performance into the future and mapping this increase in value onto the share price of these companies. The more BTC they buy, the higher the future share price. In case you haven't noticed, altcoins like Cardano and Polkadot are doing something completely different with their treasury strategies. Rather than using Bitcoin as a means of increasing the price of their respective coins, they're using it as a means of growing their ecosystem and hedging against volatility, at least for now. The good news is that there's nothing stopping them from pursuing the same strategy. The even better news is that altcoins have more leeway in terms of how they could fund future Bitcoin purchases and could do all sorts of DeFi and CeFi magic required to shore up the capital they need. The bad news is that all these strategies require significant cash flows, which very few altcoins have. Recall the possibility that the Cardano treasury could use ADA as collateral in DeFi and borrow stablecoins against this ADA to buy BTC? Besides keeping the LTV low, the only way this would work is if the Cardano treasury had a way of generating enough revenue to gradually pay down the DeFi loan. Suppose they used $100 million worth of ADA as collateral to borrow stablecoins instead of selling said ADA, and then they kept a super low LTV of 10%, so only borrowing $10 million worth of stablecoins. Now, for those unfamiliar, stablecoin interest rates tend to hover around 10% per year during a bull market. And this means the Cardano treasury would need to pay hundreds of thousands of dollars just to keep the LTV low. Aside from the fact that it would be hard for the Cardano treasury to consistently generate this kind of revenue, the money used to pay the interest would be better spent on other initiatives within the Cardano ecosystem. It would be better to be the lender of stablecoins rather than the borrower of stablecoins within a DeFi protocol, and this is precisely what Cardano is planning to do with its wealth fund. Polkadot's situation is a lot more precarious in this sense because it has a much smaller treasury and a much smaller pool of capital it can sell a DOT into. And this means that it can't spend large sums of money on building up a big treasury like Cardano, especially when Polkadot is already spending a lot on marketing. And this underscores the fact that Cardano and Polkadot are doing something completely different with their Bitcoin treasury strategies, not just compared to Bitcoin treasury companies, but compared to each other. Cardano is aiming to boost its ecosystem, whereas Polkadot is trying to minimize its reliance on DOT. Chances are that any other altcoin Bitcoin treasury strategies will have similar nuances to them. And this brings me to the big question, and that's whether we'll see any other altcoins announce Bitcoin treasury strategies, and whether their respective coins or tokens could benefit. The answer to the former is probably yes, because Cardano and Polkadot aren't the only cryptos trying to bring more Bitcoin into their ecosystems. More smart contract cryptos want more Bitcoin on their chains due to its growing value. If you watched our video about wrapped Bitcoin, you'll know that the supply of various forms has been going parabolic on multiple blockchains. And this wrapped Bitcoin is then being used in DeFi, both as a trading pair in DEXs and as collateral in lending and borrowing protocols. The catch is that smart contract cryptos need some way of growing BTC liquidity on their respective chains. In case it wasn't clear enough, Bitcoin treasury strategies are one of the ways of growing their Bitcoin liquidity, and the logic in this case is that the more BTC liquidity there is, the more activity on the crypto's blockchain or protocol. Whether their respective coins or tokens could benefit is another question entirely, though. From our perspective, a Bitcoin treasury strategy will only be beneficial for an altcoin insofar as that altcoin can generate revenue to continue buying BTC or engage in strategies similar to Bitcoin treasury companies. Again, there are not many altcoins that fit into this bucket. One of the few is Hyperliquid, which is currently generating close to $1 billion of annualized fee revenue according to DeFi Llama. The caveat is that Hyperliquid will probably continue directing this revenue towards buybacks of its own Hype coin. After all, if a project is earning large revenues, why would it use that revenue to buy Bitcoin when it can instead buy back its own native token? Some would actually go so far as arguing that it's pointless for an altcoin to accumulate BTC as a reserve asset because all cryptos are highly correlated. And this highlights another nuance. And that's that, whereas accumulating crypto assets like BTC as a means of diversification for publicly traded companies, accumulating TradFi assets like fiat currencies in the form of stablecoins is a means of diversification for crypto DAOs. In other words, if the purpose of a crypto DAO's treasury strategy is to diversify reserves, Bitcoin probably wouldn't get a very large allocation. And what this means is that the only reason an altcoin would choose to accumulate large amounts of Bitcoin would be to grow its Bitcoin DeFi ecosystem. Even then, there are other ways of increasing on-chain BTC liquidity that don't involve a main chain DAO vote. If you're a DeFi degen, you'll know that it's much more common to offer various yield farming opportunities, and these tend to be at the protocol level. So, no, we probably won't be seeing any altcoins going parabolic because of their Bitcoin treasury strategies, because they're doing something completely different than the publicly traded companies. There is a silver lining here, though, and that's that there will be a lot of DeFi protocols that benefit from the injections of BTC liquidity on Cardano, Polkadot, and any other altcoins if they start buying BTC for DeFi reasons. And if you want to know which DeFi cryptos could have the most potential in this cycle, then be sure to check out our latest video on that right over here. And if you're not subscribed to the channel yet, well, you can do that right over here. That's me, Nick, signing off. Thank you very much for watching, and I'll see you guys again soon.